P&G out with better than expected earnings. Let's get right to the man of the hour here, and that is P&G Chairman and CEO Jon Moeller. Jon, always nice to see you on earnings day. Thank you for giving Yahoo Finance some time. Talk to us a little bit about the U.S. I think in each of the segment breakdowns on your earnings release, you talked or highlighted a good bit about volume gains in North America market. Are there areas of the business that are surprising to the upside?
Well, one of the big questions, and we've talked this previously, is can we grow meaningful unit volume at the new prices that we've moved to as a result of the commodity cost increases? And the resounding answer in large developed markets like the U.S., like Europe, is yes. As you indicated, volume growth up 4% in North America in the quarter that we just completed. 8 out of 10 categories growing volume share. If you look at it over a longer period of time, the last 5 quarters, we've delivered between 3 and 4 points of growth from a volume standpoint. So indicative of a very strong consumer that's being offered a very good value. Europe, plus 4% volume growth in the quarter that we just completed. Same story over the last 5 quarters, a little over 3% on average. So back to the question on can we grow unit volume at these price levels, the answer is a resounding yes. Does the consumer continue to exhibit signs of health and a continued desire for our products? Yes. If you look, for example, at private label shares in North America as indicative potentially of some dissatisfaction with the value that our products are providing to consumers, it's the market share from a value standpoint is flat, past 3 months, past 6 months, past 12 months. So we are very encouraged by the results in both of those markets and frankly, about 85% of our business around the world.
Are you seeing a tale of 2 different consumers in the U.S.? I was recently spent some time with the Walmart team and also digging into their results. Like, they're doing really well. Target doing okay. But then the other end of the spectrum, you have these dollar stores, and that consumer seems really pressured. What are you seeing on a consumer standpoint?
We do see, of course, as you would expect, some dichotomy between different groups of consumers. But at the end of the day, first of all, we try to ensure that we have offerings that are available across the price ladder for consumers who have different outlay needs. We also ensure that in channels where incomes tend to be a little bit more stretched, that we offer a pack size that is friendly from a cash layout standpoint, which ends up being important to a group of consumers week on week. But generally, these are daily use categories, they're essential categories where performance drives brand choice. If we're conscious about providing a good value, holistically defined, price, performance, usage experience, things tend to go fairly well, as they have been.
Jon, I talked to a lot of CEOs in the packaged food industry, and now I think they're ready to offer perhaps some more promotions on their products to dial back some of that inflation. Now that inflation has pulled back a little bit, how does that look like inside of a packaged goods company like yours? Are you going to pull back on some of those price increases?
Well, based on the data that I just indicated and based on the cost trends that we see, which of course involve a different commodity basket than some of the food or beverage companies, we're very happy with where we are. We're never happy with the total amount of value that we're offering consumers, and we're going to keep working on that piece of the equation, primarily through innovation.
The packaged goods industry this election season has been, it's just been dragged through the mud. I'm sure you're following some of these headlines from Elizabeth Warren and to what the vice president thinks she could do if she is elected president. What is your viewpoint on this? Has the industry gone too far on shrinkflation? And then from a P&G perspective, have you reduced package sizes? Like, what have you been up to?
Well, first, let's just step back a little bit. Speaking specific to P&G, our whole model depends on delighting a number of constituents, delighting consumers, delighting customers, delighting employees, delighting society, delighting share owners. And I firmly believe that if we fail to do one of those, we will fail to do all of them. So it's not, if that's your mind frame, you don't put yourself in a position where you're failing to delight any one of those constituents. So that's our approach. And again, innovation is a big enabler in that regard. But that's where we are in our discussions.
So someone that has spent really their whole career in this industry, I mean, it's not like you and the team sit in a room and think, well, I mean, if I shrink this container down 2 ounces, I'm going to make more margin. I mean, like, can you bring us inside some of those discussions? Because the whole industry is, I mean, they're really getting a bad name here.
Well, it's actually interesting. Smaller sizes in general, there's no absolute rule, but in general are more costly to produce. Mm-hmm. So it's not intuitive that you grow margin by doing that. But there are times where we will reduce the size of an offering. I mentioned pack size earlier, simply because that at times increases affordability. So it's based on a desire to increase value, approachability, affordability of our products, not what's being represented.
Lastly, on your outlook, so reaffirming your earnings outlook and also your organic sales outlook. So you see the consumer strength continuing over the next, 3 quarters?
We do.
And that's driven primarily, is there a category, is it beauty? Does beauty come back a little bit? Is there 1 or 2 categories that you see driving that in particular?
Well, again, 8 out of our 10 categories grew in the quarter that we just completed. We've tried to design this portfolio where each of the categories has an opportunity to grow and create value. And I mentioned in North America, 8 out of 10 categories built volume share, 9 out of 10 categories built value share. So we're in a very good place from a portfolio standpoint where it's all generally helping to deliver the outcome.
All right, we will leave it there. I know you're a busy guy on earnings day. Jon Moeller, P&G Chairman and CEO. Always good to get some time with you. We'll talk to you soon.
Thanks.